Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at gold, and we're going to start with our Elliott wave count and then wrap things up with some basic technical analysis. Now I need to keep this one brief as unfortunately I'm having trouble with my voice again, and I've still got quite a lot of work to get done before the weekend and some during it, so I'm going to have to use it sparingly and keep this video as brief as possible. So with that in mind, let's get underway. So we're here on the daily time frame, in the arithmetic scale, and we're looking at an extremely bullish chart for gold. Now my assumption is that we've completed a wave 4 correction on primary wave degree, and we are now heading higher in a primary wave 5. That's the large wave degree. Since bottoming, we were expecting another lower low a few weeks ago. You may remember, if we go back and have a look at those future videos, that we were calling 1801 back here as our cutoff point for the bearish count. We saw a move up to that level, a fall back from it, fall up to it, fall back to it, and then a break through it. And from that moment, we immediately pivoted long in our count, in our position, and have remained with a bullish bias since. And that has been the correct call thus far, as we have now left this channel and continue to head higher. So it was the right idea to pivot. Now, the count as it looks currently, to me, appears to be a wave 3 extension, which is the most common form of extension, and we have gone intermediate level, minor level, minute level, minuet level now, sub-minuet level, looking for minuet 3, 4, 5, interminute level 3, 4, 5, up higher, and then we've got all our numbers collected up here ready to drag down as the count develops. Now, I was expecting a more significant pullback sometime since this bottom, but if this extension count is correct, we won't necessarily get any significant pullback in gold. If we do, it should probably be considered a buying opportunity. We may have to rejig the count if that happens, but if this count is correct at the moment, and we do seem to be very strongly impulsive to the upside, we could just keep moving up in extension until we get above these levels here. Now, all these levels represent is the X wave here, the high of the X wave, and the high of the minor B wave within the W. So these are essentially two previous highs in this trend of high, low, lower high, low, lower high, lower low, so on and so forth. And at the moment, potentially still a lower high. Even though we're bullish and we're counting this as bullish, and we've adopted a bullish count, which is so far proven to be right, we are still technically in a downward trend. Now, once we get above this level, 1966.61 and 1966.0, I think that's, why is that higher? That should be lower. Yeah, that's on that line, excuse me, 1960 and 1966. Once we get through these levels, we have officially broken that downward trend with a higher high. So instead of high, low, lower high, lower low, we would have a higher high here, and then at that point, I've written here a long time ago, confidence above this level. This was all the way back to when we were testing it with our X wave, assuming that we could have had a simple 3-wave move to what was our W. We could have been a 4, and this could have been the first impulse wave out. Instead, we got rejected and fell down again. So above this level, extreme confidence, I would say, in the bullish interpretation. Maybe that will coincide with a breakthrough and a retest of this level on a greater wave degree, potentially minute level or even minor level. We don't know yet. For the moment, it just looks impulsive. It looks to be an extension. It looks to continue to push higher. Above these levels, we've absolutely broken the downtrend at that point, and then our next target after that will be the previous high. You know, that should be the next thing on our mind. Once we break these old highs and set a new high, we should be looking for the all-time high as our next target. So, and of course, that's all the way back at 2075.14. I make it. We'll just pop a tag there. 2075, we'll say. Okay, so that's basically the Elliott wave picture as I see it currently. We are impulsing up in what appears to be a wave 3 extension on the intermediate degree, and then we've got all this labeling to add. Unless we see some form of significant breakdown, a retest of this channel, this count is holding up at the moment. If we do see that, we can consider ourselves perhaps in minute 3, with a minute 4 correction coming. But until we see some kind of significant move in price, which isn't to the upside, we'll just assume we're still in an extension and we're still impulsing aggressively higher. So let's save a chart there. And now what we're going to do is our basic technical analysis. So we're just going to turn that magnet off for a start, clear the chart of our Elliott wave count, and we're going to start by bringing up our exponential moving averages. We have a 10 in yellow, we have a 20 in blue, we have a 60 in orange, and a 250 in green. We're also going to bring up our momentum indicators here. We have an RSI set to a 10 close with a green 30 level representing oversold and a red 70 level representing overbought. We have our volume profile on the right hand side, showing the various peaks and troughs of the buy sell volume, with the yellow dashed line representing our point of control. And we have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. So we're just going to come out to the weekly time frame actually, I think, and let's zoom in on this more recent price action. Okay, we can see after we have labeled as a WXY double combination, we came through the 10, the 20 and the 60 exponential moving averages, bottomed, we'd made a round trip on the weekly time frame from overbought, very overbought, above 85, all the way down into oversold below 30. So overbought to oversold through all the major moving averages, bottoming here. And we can see how the bearish momentum was sustained all the way through this correction and actually into the bounce. But once we got above the 10 exponential, bouncing off the 60 exponential here, testing the 20, and then bringing the 10 back through the 20 exponential moving average, price has been supported ever since with this bullish cross here of the 10 over the 20. And we can see that bullish cross also on the short term average, the blue line crossing over the orange line, and a build up of green bars, bright green bars here on the histogram showing an increase in bullish momentum. RSI is getting a little overheated for such a sudden move. We're already back to overbought territory. So although we seem to be just being pulsing in an extension, we are starting to see signs that perhaps some form of consolidatory period, some form of more sustained corrective move, maybe that minute 4, we're waiting to see some kind of sideways move come in to cool off a little bit, consolidate a little bit before we push higher. Now let's look into, we don't have to do that though, we could just keep flying. Now if we look at the daily time frame, why isn't our 10 exponential moving average visible? Okay, it had a little glitch there for a moment, not sure why that disappeared. Okay, so on the daily time frame we can see above the 10, above the 20, above the 60, above the 250, having crashed through the 250 after testing it here with our first initial move down in our W to the tick. We had our X, we had our Y, thrusting through it, dragging all the exponential moving averages below the 250, looking very, very bearish, and then what do you know, nice strong bullish reversal, bringing the 10, the 20 and the 60 back through the 250 exponential moving average, now above our point of control, at least in this visible range here, and pushing higher. Now the RSI has us all the way up on the daily at 82. We are getting very, very overbought at the moment, very, very overbought. It's been such a strong move off of the low here that it does feel like we need to correct. Now from a basic technical analysis point of view, it feels like we need to correct. And if we look at our RSI as a guide for our wave structure, we have here a 1, 2, potential 3, 4, and into a 5th into oversold. So maybe the count is not an extension of a 3. Maybe there's a 5-wave structure in here waiting for a pullback, or at least minute level pullback. So we'll be keeping our eyes on that, but there's nothing to stop us from pushing higher, to be honest. So we'll have to wait and see if it occurs. MACD very, very bullish, continuing to push way above the 0 bound and higher. Testing the longer term moving average with the short term moving average, and then bouncing again, but with no sign of a bearish breakdown. More green bars on the histogram. So looking super bullish, looking super strong. Really good start to what I think is a 5th primary wave, but starting to get a little overcooked. Another round trip here from oversold to overbought, expecting some time of consolidation. Slight conflict with my interpretation of the count at the moment, but we'll have to wait and see. Either way, both are bullish. One's pointing towards being a little overcooked, one's suggesting that we can still keep going. So to leave you, I would say keep an eye on these two levels, 1960, 1966, these two highs essentially. Do we get through those in the coming week? do we get a more sustained move? So keep an eye on those highs. If we break those, we can look to the previous all-time high as the next target before we push on even higher. In the long term is what I think is happening. So, right then guys, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And as always, thank you very much to my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, there's a link to it in the description box below. I would advise that you wait until the start of next month, June, so that you don't get charged twice in succession for both May and June. And if you're interested, head over, have a look at the tiers, see if there's anything you like. Also, I have a Twitter feed. If you're not following that, there's a link to the description. There's a link, sorry, to the Twitter feed in the description box as well below. All right, guys, take care, and I'll be back with you soon. All the best. Bye bye.